Welcome back to Steady Income Trading Weekly Update and Review session. This is where we take a look at our performance over the last week, but we also like to zoom out a little bit further, like full year and then since the beginning, just to get a little bit of context around our performance. And to start off, let's take a look here. This column H shows us week over week. So Friday over last Friday, we're up 0.4%. Market is down 0.45 at this for the same period. So that makes us right about even here. We caught up almost exactly to the point here for year to date performance. So this is the year-to-date chart. So we're staying pretty close to each other. If we zoom out a little bit, this is last year performance, and then this is from the beginning where we are actually ahead of the market, and we want to be ahead of the market over 2 years. I don't care too much about week to week or even for a full year, but over 2 years we should be ahead of the market, because it's very unlikely that the market will give 20% back to back. So since that's our target to make around 20% CAGR, it would be unusual that we are not ahead of the market for 2 years. So I similarly expect at some point in future that the market will not continue this strong, because if you take a look up here for the CAGR over the longer period of time, this here is from November 23rd, which is when we started the UOT strategy, and it gives us our drawdowns and our CAGR and MAR ratios. So for the strategy, this is just UOT strategy, as opposed to this last 2 years here where we have a previous strategy, which was mostly 1x strategy, similar to UOT, but not exactly the same. And if you take a look here, market's been doing 38% annualized return. So obviously it's only been 6 months since, but you have to extrapolate and get a yearly CAGR. So 38, that's not sustainable. It might last for a while, for sure, for a year or so, but it's very unlikely to stay like this for 2 years. So we'll see what happens. We are kind of on a target. Market is going up, which means we should be overperforming our own benchmark. And given that our benchmark is like 20%, it was 18 for a while, but I'm putting it back to 20. It doesn't really matter. It's very close. So we are expected to overperform our own benchmark in good times, which is right now, in the last several months have been good. And this way you compensate for the times where you're underperforming. When the market is going down and we're underperforming a little, it should average out to a 20% annualized return. So same with the market. Market is now overperforming itself. It's a long-term average. And even just for the last 2 years, the average was around 12.5%, 13%, which is still high comparing to long-term market performance. But okay, let's assume that this is more of a realistic number. Then this at some point needs to come down to meet that, and hopefully we'll be able to go down less and perhaps then start making money even when the market is down. So that's the idea. MAR ratio is very high for both of us, so that's not realistic. We're not going to pay too much attention. The time frame is too short to give any indication. And if you zoom out for 2 years, it's getting closer. Our strategy is 1.8, the market is 0.77, so we are better. Our drawdowns comparing to our CAGR are lower than the market, but even this is pretty high. Our goal is to stay around 1 in MAR ratio, so hopefully that rings true. And let's take a look what else is going on. If we go back to the main page, if you've seen last video, live trading video, I talked a little bit about the improvements to the trading spreadsheet, some additions, and we now have the naked puts at risk info right here. And then we also have a little bit more precise underexposure measurement when we want to decide whether we are underexposed for the current market environment. That might assist us in a decision to put on an early trade and or allow a trade that's reached 60% profit target to stay on a little bit further to squeeze a little bit more out of it. We would do that if we are underexposed. And according to current metrics, we are not underexposed. I took the metrics on Friday when I put on the trade. So at the time we were not underexposed, but we'll take metrics again on Monday and see how we look, because after I put these on, the market went up probably, 0.8% or something from that point. So this might have changed, but this is also work in progress. We'll be adding more parameters here and adjusting them because we want to be able to mechanically respond to the market environment, to our own portfolio and our goals. And I think the spreadsheet is getting better and better by the day, and it's already probably one of the best trading spreadsheets you can find around. If you would like to have a copy for yourself, it's easy to do. Just follow the link in the description below to join our Discord. And once you join, you will access to the latest version of the spreadsheet as well as the trading plan. And you can cancel at any time and still keep the spreadsheet and the trading plan as our gift. If you enjoyed this video, please make sure you like and subscribe, and I'll see you on Monday. Have a fantastic rest of the weekend.